Good morning, members. This is C. Abhishek Chauhan, and today I am here with the fourth video in the series of recent exam MCQs. So let's start the discussion without wasting any time. There might be some practical questions, there might be some theoretical questions which are asked recently in the exam. So be prepared for those questions. Whichever the practical topics will be there, I'll solve that with you. If any theoretical questions are there, we'll go with them quickly, right? Approximately 40 questions we are going to cover in next 10 to 15 minutes. So let's quickly start the discussions. The first question is on your screen. Where does the claim of workman rank in liquidation? The answer is first pari passu with secured creditors after the cost of liquidations, after the dues to secured creditors, or second after the cost of liquidation. The correct answer here is B, pari passu with secured creditors after that, right? Next two, a debenture issued for rupees 100 but received or raised 95 only. That means 5 rupees discount. Redeemable in 10 years at 10% premium. Coupon rate is 15%. What is the pre-tax cost of debt to the company? Now, how to calculate the pre-tax cost of debt in this kind of situations? Basically, the IRR of this particular bond. That is the cost. Whatever is the return to the investor, that is equal to the cost to the investor, right? Internal rate of return is the return to investor. The same is the cost to the company, right? So here, for that purpose, you need to calculate the IRR. How to calculate that, sir? In year 0, the 95 is the outflow. Here, all the coupon payments, that is 15 rupees. And in the end, 15 plus 110. The function you apply is equal to IRR. The correct answer for this should be like this. Right? The correct answer exactly I am getting is 16.51, or approximate answer is 17%. The answer should be corrected in these questions. The answer should be corrected in here. So the correct answer over here should be 16.51. That is IRR. Next question. A debenture is issued for 100 but raised 95, redeemable in 10 years at 10% premium, coupon at 15%. Same question is there. But now the question is asking what is the post-tax cost of debt if the tax rate is 30%. How to calculate that, sir? Pre-tax cost of debt into 1 minus tax. The tax effect has to be reduced. So 16.51 minus 30%. So the correct answer for that will be 11.558, right? So 557 or 558 or 56. 11.56 is the correct answer. Moving down to the next question. The face value of a preference share is 100, issued at 95. Now, how much is the exact amount that a company is getting? 95. Against which the dividend rate is 12%. Now, dividend is paid at face value or the exactly raised amount? The answer is face value. 12 rupees has to be paid on 95. So, what is the cost of preference shares to the company? The answer is 12 divided by 95. The answer will be 12.63%. Next, certificate of recognition. Certificate of recognition of registered valuer, of recognition of registration of a registered valuer is in which form? The answer is C. A, B, C, and D and E. E is for RVO registration, right? If company wants to issue partly paid shares for a government sector to an overseas investor, right, whose permission is required, for example, defense, etc., right? So partly paid shares or for a government sector to an overseas investor whose permission will be required. The answer is FIPB or FIFP. FIPB here basically means Foreign Investment Promotion Board, right? So its investment, its permission is required. Next, in ESOP, at the time of vesting of a listed company share, which value is to be considered if the date of exercise is a holiday, right? So if the date of exercise is holiday, then which value should be considered? The answer is closing price of the share on the last trading day. Right? In ESOP, at the time of vesting of a listed company share, which value is to be considered as the date of exercise is a working day, right? The working day is there, then there might be n number of prices, fluctuation of prices might be there. Then which price we should consider? The answer is average price of the share on the current day, that is on the exercise date, right? In ESOP, at the time of vesting of an unlisted company share, that means the trading will not be there. Which value to be considered if the date of exercise is a holiday, right? The value, fair value of the share decided by the merchant category, category 1 merchant banker. The difference between GDP and NDP. right? Amount of interest subsidies, amount of depreciations, amount of capital expenditure, amount of revenue expenditure. In GVA, NVA, in GDP, NDP, in GNP, and NNP, the difference is only of depreciation always. Right? Next, twin deficit means fiscal and current account deficit. Use of financial statements by CEO, internal users, external users, employees, right? So this is again a very big kind of question which was asked and given by the member. Some additional information must be there in the exam, but normally the question is like this. So in the answer is employees. Use of external information is by employees. The mathematical estimation of the risk involved in a life insurance is based on which law? Right? So mathematical estimation of risk, right, is based on which law? Parkinson's law, Miller's law of gravity, or law of probability? Probability, right? How many persons will die? How many persons will we need to pay the premium and all? According to that, the risk is estimated in the insurance companies. The first step in Monte Carlo simulation process is to set up probability distributions, then to generate the random numbers. First step of NPV calculation is the future value of cash flow, present value of equity, future value of equity, present value of cash flows, right? So what is the first step to calculate under NPV calculation? The present value calculations, net present value. Control premium varies with whether shareholding 51%, 75%, or 100%. Whether the control premium should vary, the answer is yes. Obviously, the more in-depth control you will be having, more extra money you will be ready to pay for that. The answer is yes. Which one is not considered in the Burkus method? The correct answer is sound idea. This was one of the case study question also asked for 2 marks, and here I have mentioned it as 1 mark. An insurer uses a balanced scorecard as a strategic management tool. The main purpose of this tool, balanced scorecard, is measure the performance of the company. Okay? Which of the following method is not suitable for valuation of small and medium enterprises? Number one is discounted cash flow method. Obviously, this is useful. Replacement cost method, book value method, none of the above. Here, we have to analyze a little bit more that replacement cost. Now, a small and medium scale industry is just set up, right? So there might be very low amount of assets or so. So it is not usable that you should use the replacement cost method. That is not a best method to use in this kind of valuations. So the correct answer for this will be replacement cost method. The criteria for investment in plant and machinery, equipment, and annual turnover for medium scale enterprise is not more than 50 crores and not more than 250 crores. Right? The word exactly over here is does not exceed. Right? Does not exceed. We can say it less than or equal to, right? But here I have written the not more than, does not exceed is one and the same thing, but exact. Let's suppose 2 options you will get in the exam. Not more than and does not exceed. You will mark correctly as does not exceed because that is the exact wording of the notes in the classes also. We have discussed this point in detail. Next, what is not a quality of an asset? Monetary assets, non-monetary assets must have physical substance, default risk, right? So assets does not have any default risk. The kind of financial assets can have the default risk. That means you have to get the money from a debtor and that might default. But the assets does not have a default risk. How many committee members, how many members can a central government appoint in the committee of valuation matters? Rule number 19, right? The answer is 6, maximum 6, right? Which of the following is not a statutory book of the company? This I think earlier was question also, agenda books. Monetization is achieved by, right? Monetization achieved by disinvestment. Monetization means that when the RBI is issuing the security or issuing the currency, that is called monetization over here, right? So disinvestment. How is fiscal deficit compensated? Printing currency, tax-free bond, selling PSU share, borrowing from the market. I have discussed this in detail that just like a normal CFO, if a normal CFO is having any loss in its company or having cash loss, what it will do? obviously it will borrow from the market. The same thing has to be done by the government these days after the FRBM Act, right? Previously they can issue the new currencies, but now they have to arrange the money from the market just like a normal CFO of a company by borrowing. Formula for net present cash flow. Net present cash flow. Earlier, this question was also the net sales minus expenditure, PAT plus dividends minus taxes, PAT plus depreciation. PAT, add back depreciation and then reduce the capital expenditure. Then you get the cash flow. Spot rate is 46 to 48 and forward rate is 47 to 51. What is the bid and ask rate? Spread. Spread means difference between these. So forward rate, you can use the forward rate minus the spot rate. So it is difference between 46 and 48, 47, 51. 1 and 48, 51 is 3. 1 and 3. If the rates in future are increasing, then the spread rates are also written in ascending order. If the rates are decreasing, right, then the swap points or the spread points must be written in descending order. GDP includes all final goods and services produced within the country in 1 year. Many times we have discussed this. Fiscal policy in India is formulated by the finance ministry. Then tool of monetary control, right? Direct taxes increase, subsidies cut off, increase cash reserve ratio, reduce government expenditure. The correct answer is this. All three other are the fiscal policy tools. Sorry. Capital gain on property transferred to wife under agreement to live apart is taxed in the hand of, right? Is taxed in the hands of Mr. Ramesh, Mrs. Ramesh, both whose total income is higher. The correct answer for this is Mr. Ramesh, right? When property is transferred to wife without consideration, income shall not be clubbed if divorce is filed, living together despite divorce, as per the agreement to live apart. जो भी agreement to live apart है, according to that it will be done. If interest rate rise, the bond duration will decrease. Sir, how we can check? Make a base example, increase the interest, duration will fall, right? Because duration is basically how quick you are recovering your money. Now, if let's suppose the interest rate is 15%, or let's suppose the duration is 10 years, you might require 10 years to recover your money. Now, if the interest rate is 20%, obviously you will recover your money early, right? In maybe 7 years, 8 years. So, the amount of outflow is recovered in how much time, that is called duration. So, if the interest rates are increased, the duration is going to fall. Not a generally accepted method for cost of equity, CAPM, dividend discount model, rate of preference dividend plus risk premium, and PE ratio. Generally, all of these are used. All of these can be used, but generally it is asking the rate of preference dividend plus risk premium is not generally or widely used policy. Others are widely used, but we cannot say that that is not usable at all, right? That is also used sometimes, right? Add the valuers option dash of third party specialists may be included in report. Remarks, summary, findings, or written report. What can be included? The answer is written report also can be included. Intangible assets created by a customer relationships are called. Intangible assets created by customer relationships are called customer based intangible assets. In acquisition, profit in fair market value, consideration paid is recognized in goodwill, amortized, transfer to capital reserve, or deferred, right? The correct answer is transfer to capital reserve in a business combination kind of deal, if any benefit is there. Lock-in period for ESPS is 1 year at least from the date of allotment. Minimum vesting period under ESOS, SEBI, right? Minimum vesting period is 1 year. It can be more than that, but it should be at least 1 year. Financial instrument is asset or liability, either A or B, or share capital. It is the first line of the India's 109. Financial instrument is an asset or liability. So the correct answer for here is either A or B, right? So these were the questions that we have covered in this video. Please revise this and wait for the next one to practice more MCQs on your part. Thank you so much. Have a great day ahead.